What's going on, everybody? Happy Friday. Glad you could join me. This is my weekly close live stream. I do this every week at 4 p.m. to rehash what has gone on in the market and hopefully try to find some opportunities together with everybody. I go by Norok. I am a professional trader for about a decade, and that's my bona fides. This is what I love to do. I love to study price action and share what I have learned, what I'm doing, and what I think is coming up into the future. And the reason I do this is because I want to give back. I want to share the things that I have found actually work when analyzing the market. I'm pretty simple about what I like to look at. This week, what I want to talk about as a topic, which is a little bit later, we'll get to it, is what price tends to do at support and resistance levels. Now, in trading, nothing is ever 100%. But price, the price of everything, whether it's the S&P futures, whether it's Bitcoin, whether it's cotton, whether it's oil, it tends to do similar things, especially when you get to points of highs and lows that it's made in the past. Or what I like to use is, retracement levels. A lot of people call them Fibonacci's. I just use the simple 50% level. And so there's been a lot of good examples, especially in the S&P futures, but also in Bitcoin and Ethereum that we can look at for examples and try to develop a sort of rule set for what price is likely to do once it hits these levels. And so that's what I'm going to touch on as we get into sort of the topic, the sermon part of this live stream. What I like to start off the live stream with is market recap, look at the various instruments that I like to trade, mainly the futures of the market, the S&P futures and the NASDAQ futures, Bitcoin, Ethereum, individual stocks. As always, if you as a viewer have a chance or want something to look at, want to take a look at something, post it in the chat. I want to look at it. I'll give you my opinion. You may not like it, but it's just my opinion. If it's worth an opportunity, I'm going to take a note on my my pad right here, as I do a lot of live streams when viewers come up with something really interesting that I need to set an alert on. And that's one of the reasons I do this. And that's also the reason that I have a trading community, link below, Discord. I don't charge for it. I just want to have a community of active traders sharing ideas. I share my ideas in real time on there. I post things to TradingView pretty often. This week, Amazon was probably my highest conviction purchase. We're going to look at that here in a little bit. And let's jump into things. Let's check the chat. So, yeah, thanks for joining, Ver. Appreciate to have you. High Stone Pilot, regular viewer. Good to see you, friend. And Alex on YouTube. Yeah, by the way, on every Friday I stream this at 4 p.m. on Discord, TradingView, and the YouTubes. So if you're catching this late and you're watching it through, try to get it live. That way we can have a more interactive experience with me and you. And if you have questions about the things that I'm talking about, we can go into that. And more than happy to elaborate and share what I know. And again, if you have questions, I already got some questions in the chat right here, so we'll get to those. Let's take a look here. All right, so we got a couple of things to look at: bear ETFs and some cheap tangible plays. Okay, so option farmer, what do you want to look at first? There's a lot of stuff there, like bear ETFs. What is dog? All right, let's jump into this. Since we'll do the market recap in a second. We got a couple of questions here. What is dog? Pro shares short Dow 30. I take it that's kind of a play on the that stock is a dog kind of saying. So if you think the market's a dog, you go long dog. Yeah, okay. Short Dow. Okay. Yeah, imagine if you have an IRA or some sort of a account where you can't do something fancy like take puts if you want to hedge. Yeah, that would be a pretty good This is pro shares short. Okay, so it's not a leverage short. It looks pretty. Looks just pretty 1-to-1 short. I'd imagine. Yes. Yes. No. I think this is leverage just by looking at it. Yeah. I am actually not a fan of leveraged. Well, okay. So the leverage short ETFs can be good as a hedge in a portfolio. In other words, if you think the market's going to go down, let's say you have 50% of your account in long stocks, you could maybe put on 25% in short. Well, you could buy dog and then you could get some hedging in your portfolio. So that's a good use for it. But unfortunately, sometimes I think people just try to play them as speculative instruments. And the problem is with short ETFs is risk asymmetry. In other words, it tends to go down more than it goes up. And so you want to be careful for that. I'm going to tell my girlfriend it's a puppy company and a stick as a hedge in her account. Okay, I mean that's fine. You know what's funny about managing girlfriends and wives accounts, and this happened to me and my friends. I find it interesting that if you're managing your significant other's accounts, you tend to take less risk, and oftentimes those portfolios actually tend to do better. I've noticed that anecdotally, to be the case. Question: I have started coding for a trading bot. Can you help me on how I could use the bot on demo Oanda account so I can buy and sell? Well, the question I would have is, what do you want this bot to do? Are you wanting to automate a strategy that you have, or do you believe that this bot is going to trade for you better than you can trade? That would be my first question, actually. I have actually gone down the path years ago of programming bots. We used to call them expert advisors in MetaTrader 4. They're still around. It's still what they're called. Now there's a lot, you can do a lot of programming in TradingView. You can do a lot of different platforms. But sometimes I think people get into this algorithmic trading. You can even use ChatGPT now to program trading bots. When I got into this about 12 years ago and I started programming, I thought that I was going to engineer a bot that was going to trade the market and win. And I had really good results because what I would do is I would program the bot. I would input the parameters like the RSI and the moving averages, and then I would optimize it. I would put in different variables for it and then run back tests. And then I'd find that, oh man, this trading bot made a lot of money. But then something weird happened. Whenever I would apply it to live data, it wouldn't make money. I didn't know why that was until I gave up for a while and came back and started trading manually and realized that the market changes. Now, there are people that run algorithmic trading companies, but consistently when I've read interviews with what they've done, there's one thing that I think they all do. They have multiple bots going on at any one time. They may have a trend following bot, they may have a mean reversion bot, and then they understand that at different points in the market, the bot is going to behave differently. In other words, a trend following bot would have done very, very well in January. And we're looking at the NASDAQ right here. Let's bring up the ES. I got a little bit cleaner chart there. So in the month of January of this year, when the S&P futures were going up, 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 I think even Amer, who's with us today, what's up, buddy? He was working on his bot, and I remember he posted in the Discord something about how, wow, like this bot, if I change these parameters on the RSI to, if I move the RSI up a little bit and basically tilting that bot to be more of a long, because it makes logical sense. You look at the results over the last data set that you have and over the last few weeks of January that you were looking, the short trades were losing and the long trades were winning. And so naturally you'd be like, oh, well, let's tweak it to only take long trades. Well, that works in a bullish market, but then what do we have in February? Well, in February, we had a consolidating market. Not bullish, not really bearish. A trend following bot would have gotten chewed up. And there's really no way that you're going to program around that. The bot's going to do exactly what you tell it to do. Now, where you as a programmer would come in is you have to use your brain, your trader brain, to know what kind of market it's in, what bots should be used during that time. But there is never going to be a one-size-fits-all bot. There just isn't. There just is not. If it was, somebody would have found it. There's a lot of smart people, smarter than me, smarter than, maybe not you, maybe you are very smart, but just for the sake of argument, assume that there's people with multiple PhDs and supercomputers working 12-hour days to come up with bots to program the market. Not saying you can't beat them, but they're very, very good at what they're doing, and they're chasing the same thing that you're chasing. So there's never going to be a way to simplify trading, because what you're doing is the price is the reflection of human emotions, which are irrational, and you're never going to be able to encapsulate everything that price may do in any kind of logical structure. The only thing you can do is apply what makes sense with risk management. In other words, when you're right, you make enough money so that when you're wrong, you don't use it all up. It's really just that simple, but within that, it's very difficult. So, yeah, you do need several bots. Please cover short-term price movements on XLF and TLT. Let's just jump into the market update. Okay, so let's start off in the S&P 500. I'm going to use the futures for that. And this week, what we were looking at as we open, let's just go through when we open up the week and see where we were coming in. This was a short week because we had President's Day. The stock market was closed. Broadly speaking, where we sit in this weekly chart, COVID low to all-time high. Price in October pulled back to the 50% retracement of the entire bull market from COVID low. And then what price has been doing now is smacking up against, let me get my marker here, the 50% level from the all-time high to the October low. Right there. That's the D50. That's the daily chart 50. Actually, well, it's not even the daily 50. I need to come up with a new name for this. 1 second. What do we want to call this? Let's call this the 22 50%. So that's the entire bearish move of 2022 from the all-time high down to the October low. And this is a weekly chart, so the last week of January banged up against that level. That was also, by the way, the level that the December CPI print spiked out at. Now that spike definitely signified a little short bear retracement to there. And where that went to was, again, from the October low to the December high, 50% retracement. And this kind of price action right here is what I want to talk about later on in the live stream. Is when price gets to a level, I mean, it doesn't hold it exactly, but we can come up with a rule that lets us act accordingly when it comes to this level. It has to do with bar closings. They're very, very important. That's what we're going to talk about later. And then after holding this level, we came up to on that this is of course the January bull run up to here, came up, smacked up against that 2022 50% level. First week of February, bing. Second week of February, bing. You have couple of holds at that level. Price is respecting that level, 41.55 on the S&P 500 futures. SPY is 415, let's call it. Same thing. Now, this week, this is SPY we're looking at right here. Let's go back to S&P futures. So Friday, that was Friday last week. It was pretty clear that what we had done is set up a little range here through February. And then Tuesday, market comes back after a long weekend, and we just bust right through it. At this point, to me, it became clear that the first level in any kind of pullback from a trend is going to be the 50% retracement level. And so we're going to look at the entire January move from the low of December 22nd, where it held, and then launched off of this low. By the way, there's a little 50% level right there. Just 50% as it goes up. Nice, strong trend. And so what's it going to do? Tuesday, Wednesday, we have price holding at this level. Thursday, kind of tries to get off that level. And then today, to close the week, we lost the level. We lost the support. The price action here, which I thought was very interesting as the week went along, there's a word for what you see here. We're on the 30-minute. And so that level is 39.9850. Let's call it 4K. Let's call it 4,000 S&P 500 futures ES, 4,000 ES. And so notice how price pings the level, comes back up, makes a higher high, breaks the level, makes a lower low, makes a higher high, makes a lower low. There's a word for this. Anybody in the chat know what it is? Yeah, we'll look at the stocks in just a second. We'll look at Procter & Gamble in a second. You guys know what the word for this kind of price action is? There's a word for it. It's a fun word. We like to use it in Discord. You're close. Oh, you're just joking. I know who that is on TradingView. All right, time's up. The word of the day is leptocurtic. That's our word of the day. We like saying that because it's fun. Leptocurtic, or just lepto if you want to shorten it. Lepto Q-tip. Yeah. So what does leptocurtic mean? It means of a frequency distribution, or its graphical representation. Price action is graphical. Having greater kurtosis than the normal distribution, more concentrated about the mean. What is kurtosis? Well, kurtosis is the sharpness of a peak of a frequency distribution curve. So this is not exactly coming from price action analysis, but if we go back and we look at it, there's a sharpness of the peak, high, low, sharpness, with a frequency distribution that has greater peaks from the normal distribution of the mean. What that means is you're making not only higher highs, but higher lows. You're getting further and further away from that mean. Now, this right here, I didn't find a single futures trade that I liked. I took, I think, 2 losses trying to catch a trend this week because it's just the definition of not trending. This is a blah. And notice how this pattern even continued into the price action of Thursday, where again, you had a higher high, higher low. Like this thing is just up and down, up and down. But it's happening in the context of what? It's happening in the context of this level. So while day trading was not very good, we're seeing price start to respond to this level in a little bit of a way. It's not making a decision. But as we come through this day, we zoom out to the higher time frame, the daily, we can see that we do have a closed blowout level. So where's the next place it's going to go? Well, we got to look at the broader 50% trend. The next support is likely going to be, well, let's take that off. 38.55, basically where we started the year. So we had a great January. February is stalling out. We've got a few more days, 2 more days in February. Next week's February Tuesday, which is the last day of the month, is actually going to be pretty interesting. That's when the Case-Shiller numbers come out. Now we'll talk about that next week because that's a big number I've been looking at for the real estate sector. But that's probably the most major news we're having come out next week. But this January trend, this nice bullishness that we had, is decidedly falling off and giving up supports, and we may be coming back to retest the start of the year. NASDAQ is a little more volatile. I'm going to stick with the ES for the analysis, so I'm going to be looking for us to kind of come back towards the end of the week, next week, and we'll see how March begins. All right, let's look at Bitcoin, cryptocurrency. So Bitcoin's been very interesting because I've already got them marked off here. There was, of course, the swing high at the FTX. That's pre-FTX. That's at November 4th. And price held it in January, middle of January when it came up. And then we had a little bit of a bear move that came back down to test it and hold it in the middle of February. And, of course, in recent times, there's been this nice little boop, boop up. And, man, this is actually, it's got some hopium in the crypto trading forums. A lot of people are very convinced that everything's going to be okay. Everything's going to be fine. You know, they might be huffing on a little bit of this, a little bit, maybe. I don't know. I hope the best for everybody. But I just think back to the 2019 fake bull run and a new low. Yeah, because right now what it's done is stalled out at the swing high of August. And it has come up, bing, 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 tried to get past 25,000, just can't seem to break above it. Now, in the interim, as we go into this weekend, from the low to the high here, about 7 p.m. Eastern, we're going to see if this daily bar will close to break this 50%. Of course, you know, we've got this trend right here. And just like anything, I'm looking for it to go from level to level. And it had a chance to come and hold this level right here, and it's losing its chance. So I don't think that this bull trend is just not showing that kind of momentum that it needs to get up there. I would be looking for the 50% retracement on Bitcoin to get up possibly to 32,000 over time. It is still bullish on the daily time frame. I'm going to me lines. Let's clean it up. As I've been talking about since the middle of January, when we busted out of the cloud, the Ichimoku daily cloud, and started this bullish trend, it is still trending bullish. It wouldn't get bearish until we get back down to the 2,000 range, which is very far away. So we could hang out, slowly grind up, and reward the faithful. And like I said, the next resistance level I'd be looking at on this is going to be 32,000. But that doesn't mean at some point we won't get a full 50% pullback to maybe the bottom of the Ichimoku cloud or 20K. I think that it could be very likely that we get a nice 50% pullback, hold it, and then we can make that move up. So if you're looking at dollar cost average, try to resist doing it now. Wait until you get a very significant pullback, and you might be able to get more Bitcoin. Ethereum. Again, messy chart. Let's clean it up a little bit. So Ethereum, on the other hand, has in fact held on to its pre-FTX collapse high. This has been the level that it's been smacking up against for the better part of 2023, from the middle of January. And it just can't seem to push with momentum past the FTX debacle. So still that 1678 level on Ethereum is holding. Just like Bitcoin, I would be looking for this to maybe do a full pullback. I was looking for the full pullback on this down move right here. That's why I was about to 1400. I was seeing if it would get to that level there, but a little bit of bullish action, and now it's coming off. And don't know the future. We could just be entering into a consolidation pattern, nice little range as it may want to do. But I think 1400 would be the most interesting level if we can get it to come down to there. So that's what I'm looking at there. My favorite, Monero, in itself, it came back in February to its 50% level of the trend, and it is back down at it right now. What I think is interesting, and I thought this was interesting throughout all of 2022, I've talked about it a lot, is Monero versus Bitcoin. Now, from the beginning of 2022, this is XMR, BTC, in other words, Monero versus Bitcoin. When the bear market was proceeding, the bear market was going on in all of crypto, Monero, which is a privacy coin, it's not new, it's been around since 2014, it outperformed Bitcoin. It went down as well, but throughout 2012, let's see, 2023, yeah, right here. So throughout 2022, Monero in the bear market outperformed Bitcoin. Now, in this recent bull move, this recent crypto bull market, Monero has benefited from it, just like Bitcoin, but that trend has reversed. But every day when I look at my watch list, I notice where when we have a bad Bitcoin day, even though Monero is down, Bitcoin is actually a little bit up. And it's pulled back to the 50% retracement of this whole 2022 move. And so I'm looking to see if the bear market of crypto continues, if this Monero resilience will resume once again. And so I'm interested to see what happens at this level on Monero Bitcoin. All right, look at some other things. So going down the list, I think we need to circle back to stocks real quick. We'll talk about bonds, TLT, and we'll talk about the dollar in just a second. But VIX is the timing element for the S&P 500. It's a derivative of it, but I like to look at this to time tops and bottoms in the stock market. And the 19 to 20 level throughout 2022, here's the March hit of that level of volatility, here's the August hit, here's the December hit. So that has been the floor of the VIX from 19 to 20 has marked the tops of the stock market throughout the swings of 2022. And so as we went into this year, I started to see the VIX getting below this level, indicating we might have a bull market. But that was actually a little obfuscated by the fact that a lot of options trading has been going on with shorter term, 0 days to expiration, zero DTE options. A lot more traders are trading those short duration options. And that's been taking some of the volatility out of the broader VIX, which is based on the 30-day expiration options. And so I didn't get a really good read on this. But now, one thing I've noticed, one second. Let me show you what I mean. We're going to use Thinkorswim in the option chain for this. This is ThinkBack and Thinkorswim. I don't particularly like paying Thinkorswim their extra commissions on futures, but this tool is pretty awesome for back testing options. So if we go back to, let's say, January the 11th this year. Now these are closing prices of options, but we can see the difference. Okay, so here's the February 10th 30 options. Okay, So these are the ones that would have been expiring 30 days after January the 11th, the 10th of February 23 weekly expirations. And over here on the right, we have the average implied volatility. Let me bring this up actually. Yeah, we'll just bring that up. So take that off. Okay. So the implied volatility, the average implied volatility of all these options in this expiration is about 21%. And you can see there, close to the money, 395's 20, 20, 20, 19. And then on the call side, it's also 1920. Okay, so that's pretty accurate, and that's 30 days away. And so on January the 11th, the VIX was trading at about 20.6. So in other words, that's what we would expect. The average IV of the 30-day expirations on SPY were trading at 20. The VIX is a little over 20. But if we look up the chain and we look at the 1 day to expiration, in other words, the ones that expire on the next day, that average implied volatility is 57%. Wow. And implied volatility is the extra pricing that's baked into options. It's that extra. Basically, when people are fearful, they want to buy protection. And options are sort of like insurance. And if someone is really fearful of a big move, they're going to overpay for that protection. They're going to jack that price up through the bid ask, through supply and demand. And people are going to want to pay more for options than they would normally. That's not really the word to use, but options are overpriced, especially when you have 57% on the 1 day to expiration option versus 20%. In other words, they're pricing in a bigger move relative to time within 1 day than they are within 30 days. That's very irregular. Let me show you how irregular that is. If we go back and we look at 2022, when the market was trending down a little bit, the 30-day, well, we can use the 29 options, the implied volatility, remember it was 20 for us this year. The implied volatility for a 29-day, let's call it 30 option, is 17% versus the 20 for the 30 days this year. But the 1 day to expiration implied volatility was 16%. And that's what it should be. You should expect less movement in the short term than you do in the long term, because that just makes sense. I mean, obviously price can move more in 30 days than it can 1 day. All the other things being equal. So in a normal condition, a year ago, same day in January, the 1 day to expiration implied volatility was 16%, and the 30-day was slightly more, 1% more, at 17%. But then you come into, again, 57% on the 1 day to expiration versus 21%, a whole 36% difference. And that was really skewing this number right here, because there was more people trading, more was baked into the 1 day, the 0 day expirations, than was being reflected in the VIX. This should have been higher because it doesn't even calculate the ones. Well, that was a unique situation that happened then. What does it look like today? Well, if we go to today, and we don't have a 1 day, but here's our 3 day for next Monday. That's 13% for the shortest duration. 13%. That's pretty normal. And then the 30-day, which is going to be, let's call it the 28-day, is 21%. So that's all gone away. That craziness of the first part of the year that was skewing the VIX, keeping the VIX lower than it should have been, is now gone back to normal, where the shorter duration options are at about average of 13%, and the longer duration 30-day options are about 21%. And so that weirdness has gone away, and now the VIX is more accurate for measuring volatility inside the market. But I got a little fooled. I think we all got fooled. And so now that it's normal, we can look at it in this terms. VIX has come down to the support of 19 to 20, and it's held and is rising. And when VIX is rising, what the market is doing is pricing in a down move on the stock market. And so I'm not going to look for the market to be bullish unless we can start getting back down into this 19 to 20 level. But as it stands now, extrapolating into the future, we're coming off of support on the VIX, which means that the market may have topped out in February, back when we were testing the levels right here. I did a little experiment where I tried to do some math to figure out where, the VIX should have been. But I think now that it's returned to normal, that's kind of beside the point. We can look at this and we can say, okay, VIX is rising, market's going down. The two indicators are confirming each other. And so that's what I think is important to look at the VIX right now. Not to sow FUD, but once again, we can use the VIX for timing the market. So, all right. Well, it was the new margin because what you can do with options is you can achieve a lot more leverage because you're trading 100 shares worth of that particular stock. Now they expire and you lose that money if it doesn't go in your direction. I'm not a big fan of short-dated options actually, but people can use it that way. And of course, they are derivatives, but when lots and lots of people are buying or selling these options, the market makers that are issuing these options, they have to go out to the market to protect themselves because they're not going to take losses and buy or sell 100 shares for every option that they're dealing with. And that does, in effect, move the market. All right. Just go down my list right here. TLT. Now, TLT was going to be my trade of the year, and we'll see if it is or not, because as interest rates are rising, and they've already kind of priced in just 2 more rate hikes this year, you should start to see bond valuations go up as long as interest rates stay the same. And so TLT was the way to express this. It's a ETF of 20-plus year treasury bonds. So as long as we don't have unexpected rate hikes, bond valuations should go up. Of course, if yields go up, bond values go down, and that's not going to be good for TLT. And so I think what's been happening here over the last few weeks is we've had conflicting economic information about the economy as well as inflation that is leading people to price in or increase the probability of another rate hike. Now, the Fed has not said that they're going to do another rate hike, but whenever news comes out, like, was it Thursday or no, it's today. Today we had a news core PCE price index, which is a component of what the Fed is looking at for inflation. It ticked up a little more expected. So there's slightly more inflation than people expected this month, which doesn't necessarily mean that the Fed is going to raise rates, but it increases the probability they might just a little bit. And so that's one of the reasons the market sold off today, was because we're not necessarily going to get another rate hike, a third one in 2023, but maybe it inched up, there's a 1 or 2% probability we might. So that's what their market responded to. And I say market, I mean stocks, I mean crypto, all the risk markets don't like that. Turns out risk assets really like free money. Hi, Ravaj. I'm new to trading and just started trading. I'm trading crypto futures. Any indicators or methods you would suggest, like AI or something? Anything will be helpful. I do believe that you need to use your own brain to trade. I think that at the beginning of the live stream, I talked a little bit about trading bots. Let me protect you from something real quick. If anyone sells you an AI-based, because that's been all the rage this year, AI. If anyone's selling you an AI-based trading, run. It doesn't work. Logic. If someone had a product that could trade the market and make money, why would they sell it? Why? They can make all the money they want. Why would they need your money? Okay, that's number one. Number two, if everyone was using this bot because it was so good, it would slowly erode the edge. So if you see someone advertising any kind of algorithmic, machine learning, chat GPT driven trading bot as a boxed product, buy this, make money, scam. 100%, do not pass go, do not give them 200 of your dollars. Now, as far as you trading and learning, thank you for joining. One of the things that I like to talk about is the methods that I use. And we're 45 minutes in, so I need to finish up this market recap. But I wanted to talk about a particular method. No, like machine learning indicator in TradingView. Okay, so machine learning is a buzzword. That is just the fancy word people are looking at this year because AI is all the rage. That is just a buzzword. I don't know what that does. I don't know what you're talking about, but I'm just promising you, if someone's selling you a way to make trading easy, it is a scam because trading is not. You have to use your brain. You have to sit down and look at charts and make your own decisions with risk management. Those indicators are already late in TradingView. Well, it could very well, okay, late. Well, little trick they used to do there. I'm not going to mention the name of this particular trading algo, but there used to be this bot that they sold, which fortunately I think TradingView banned them because last I checked, their account was suspended. And they would advertise, and they would have like a video of it live trading. And you would look at that video and you'd see like, wow, it bought here and sold here. It sold here and bought here. That's great. I want to buy this thing. But what it was doing was it was using Hakanashi candles, which redraw after the price has actually changed. And so now the TradingView's added a little warning, actually, not too long ago, that warned people this indicator redraws bars. So in other words, what you see in the past on the chart, all these nice, perfect buys and sells, is not what it's going to do in real time. Because it's basically this indicator is able to buy and sell knowing what the future held and then redrawing it back on the chart. So be very, very careful when you look at indicators that do that. They're not real. If they give you the signal, that signal's too late, well, everything's obvious in hindsight, isn't it? Let me finish this market recap. Hang out. Let me talk about what I was going to talk about today, trading around support and resistance levels. We'll get into it. And by the way, if you have questions, if you want to talk more about trading, I have a Discord. Link is below. I don't charge for it. I just share my ideas. I ask people as their membership fee to share their ideas as well. Because what I want is to have a trading community where people can share ideas, because I frankly can't look at every single thing out there at once. And it helps if other people are coming up with ideas. And a lot of people in our chat are very good at that. So come join. All right. Gold. Gold is falling off from a resistance level. Had a nice little run there starting in November. But I think it's probably coming back down to the 50% of about 1,800. That's the trend from November to here. So when gold starts to get to 1,800, start looking for it to find support. Silver is falling off as well. Looks like it might be at its 50%. Let's take a look. Oof. So just like the stock market today, silver lost its 50%. Wait, Monday is going to be really, really important. And I'm going to talk about why Monday is going to be really important here in just a second as part of my whole support resistance level. So what you see here is that this Friday, today, silver futures have closed below that level. Doesn't necessarily mean that it's broken yet, but that's your first of two that we're going to look for. 2 bars. Keep that in your mind. Dollar, DXY. This has been the dollar price action is one of my favorite things to look at over the last few weeks. So this whole broad trend from May of 21 up until October of 2022, it pulled back to its 50% level on the DXY, 102, and that's what it's rising off of. My favorite way to express this is in euro dollar, which dollar index is going to be made up majority. Well, yeah, I think it's a majority. It's maybe about, used to they would say that the euro dollar made up 70% of all forex transactions. I'm not sure. Let me look real quick. So, what are the components of DXY? I'm curious. I've talked about DXY. We got a nice little pie graph here. One second. So DXY. No. DXY currency. I hate that. Okay. The currency weights, 57% is euro dollar. Japanese yen is the second largest component, and Great Britain pound is the third largest component. Then you have CAD, Swedish krona, interesting, and then the Swiss franc at 3.6%. More in Swedish than Swiss francs. That's interesting. So euro is going to dominate that. And just as the DXY has come down to its 50% level 102, the euro dollar did the most interesting of things. We had a daily spike. This was on the 2nd of February, following into that Friday. And the DXY is trending up. And because it's euro dollar, you got to flip them. And so the euro is losing value as the dollar gains strength. I got a little division problem there. And off of the 50% level of the euro dollar at 109, you have a spike up, a failure to hold, and that's creating this down move. And of course, I'm going to say that the euro dollar is coming down to, let's call it 102, 103. Dollar yen, same way, looks a little bit more like the DXY. Its hold of the 50% when it got down to 127.26, it had a perfect, I think even within like a few pips, that whole year. This is the power. Okay, so that Ravage. Wait, hold on. So to be honest, I have $100. So if I trade with $10, 100 times level and isolated margins, no, using 100x leverage is not helpful for a rookie. Stop it. Stop. Don't. No. Trade the smallest amount possible. Trade for like $1 risk. Okay. No. No. I've never traded with 100x leverage. I barely trade with 2x leverage. And I've been, part of the reason is because I've been doing it so long. You do not, especially as a new person, need to be trading that much. I know why you want to trade with that much, because you want to make money. That's why people get into trading, is to make money. So let's use more leverage to make more money. No, you lose money faster, and you're not going to learn. If you're just starting out trading, you need to make that capital that you have last as long as it can to teach you. Okay? I'm sure it does, dear Ernie. Assume that whatever money you're starting out with on day one of trading, if it's your first day trading, if it's your first week or first month, that money that's in your account right now, it's gone. It's gone. You're going to blow it up. 100%. I don't think I've ever known or read of a trader that has never blown one of their accounts, if not multiple. I've blown accounts. Years ago, I put a lot of zeros behind a loss. You will blow it up. But if you use more leverage, you're just going to blow it up faster. You're not going to make, don't even think that you're going to make money in your first year of trading. Maybe the people that started trading in 2021, because it was such a bull market and everyone's a genius, maybe they made money, but where are they now? 2022 hurt everybody. That was only going to go on so long. So stop it. Use no leverage. Trade for pennies. until you learn. Please, just listen. Just listen. I know you're not going to listen, but just listen. Just listen. And trade the smallest amount you can. Yeah, or just blow it up. Blow it up and learn your lesson. In fact, you know what? Just go ahead and do it. Just go ahead and trade 100 leverage. It's fine. I know you're going to do it anyway. I know you're going to have 2 or 3 wins in a row, and you're going to be like, that Norok guy, he doesn't know what he's talking about. He's only been doing it for 10 years. I'm obviously awesome. I'm a genius. I just had 3 wins in a row. Let's bump up that leverage. Well, fortune may favor the bold, but the saying goes, I know old traders and bold traders, but I don't know any old, bold traders. Anyway, back to the dollar yen. Dollar yen, and the reason I segue from that, I use 50% retracement levels because they work so often. At the beginning of the live stream, we looked at how the S&P 500 had come up at the end of January to hit that 50% level that it created through 2022. And 1, 2, 3, we're coming off that resistance. That's just a 50% level. Dollar yen, 2 of the largest economies in the world, their currencies respecting the 50% level of an entire year's worth of trend within what range of margin? How many pips did it come off 127.268? Each pip is going to be the second decimal place. So the low here was 127.21.5. 5 pips. 5 pips. A trend that has been going on for 2021. Yeah. A 2-year trend hits a level, a 50% level, and bounces off of it within 5 pips. You needed a 6, let's give it 7 for spread, stop to catch this move up. That's amazing. So, yeah, we're getting towards the end here. Let's just look at what we wanted to. So, number one, as a new trader, if you're using TradingView, which you're on TradingView, so you are, I want you to do this. I want you to look at a trend. I want you to go up here to the left, and I want you to bring up the Fibonacci retracement. It should be the top one, okay? And we're going to go from the very bottom, basically the lowest of the lows of that trend, up to the highest of the high. And we're going to draw it. Now, when you first open up your Fibonacci tool, it's going to have a lot of lines like this, that as a new trader, it's going to probably at first confuse you. As an intermediate trader, it's going to dazzle you with possibilities. But as an advanced trader, we're going to actually take off all of these extra lines because you don't need them. You do not need them. This old Fibonacci guy that lived hundreds and hundreds of years ago before they even had computers, he thought we needed more lines than we did. We don't. We just need the 50%. So we're going to take all those off. And then once we've analyzed that, we're going to look for price to respect that level. So if we're in the the dollar yen, and it's trending upwards, we're going to look for the highest high, the lowest low of this trend, and then we're going to use our 50%. And then what we can do in TradingView is we can right click on the chart if we want to, and we can add an alert, and we can say it's a 50% retracement is the title. And hey, you, dollar yen has come back to its 50% retracement for the entire November to January run. Come look at it. Maybe you want to take a short trade. There our research is done. And we're going to do this on everything. Let's take a look at Bitcoin, because you're probably trying to do that on Bitcoin if you're having 100% leverage. I don't know of anything other than crypto that has 100% leverage. So, Bitcoin. We got a lot of little trends up in here, but I know if you're just starting as a new trader, you're not looking at the daily time frame at all. You're looking at the 1 minute, because why would you want to wait to take a daily trade? That's okay. So, what are we doing here? We have this little low from Friday here, all the way up to the high just a few minutes ago. And what is price doing? Well, it pulled back to, kind of down, boop. It came down to the 50% right there. So from 2 hours ago, we had a little trend in here, pulled back to the 50% retracement level. This is at a support. Is it going to hold it? We shall see. Maybe we want to take a trade. Maybe we think we want to go long. So what we would do is we would set up a long trade. We can even set our stop a little bit below that low right there, but let's do it a little more specifically. So we're going to try to get back up to that high. It may miss it, so we're not going to go properly. We can use this risk reward tool to give ourselves a 3-to-1 risk reward ratio. And that's a trade that we can take off the 50%, because what we'll be looking for is for price to come off of this and retest that high. That's what we're looking for. And the beauty of it is, if we repeat this over and over and over again, yeah, we may take some losses, but every win that we make is going to give us $3 for every $1 we may lose. Boom, we just entered. All right, let's leave that alone right there. So today was a 61.8% Fibonacci on what time frame? If you want to use the other Fibonacci's because you like them better, go for it. Go for it. I just only use 50% because it's consistent. I don't have to think about it too much. I've realized that as I've gotten older, I've traded longer and gotten more experience, like maybe my brain has shrunk a little bit. And so I don't want to look at all these extra lines. My brain can only look at highs, lows, and 50% levels. 1 hour? Well, my interpretation would be, while this has come back down to a 68 or 61.8% retracement level, all right, let me clean this up. While that may, is it this from this low down up to the high? So basically the February 13th low to the February 19th high. Beer. Is that what you're talking about? Where's my beer emoji? Oh, there's my cocktail emoji. I would look at this as such. What you've actually had happen here at the 50% is you, on the 1 hour, you had a close above, and price has come back to hold it as resistance, and now it's trying to go lower. And so I already see in just the price action right now that price has come down to that 50%, come back up to retest it as a resistance. So what you want to see is you want to see a situation like this. Come here. Now this is a bunch of but we can use it for example's sake. I would not trade this, but you have a high to a low, creates a 50% at this 23.4. We can set up a little short trade right here, maybe come back down to retest it, give ourselves a 3-to-1. Boop. Now let's make it a little slower so I can talk about it. And so let that thing come up, set it up. Is it going to touch that level? Yeah, there we go. There we go. Just barely touch that level. And boom, there we go. So, yeah, I mean, this could have come up to a 61.8%, but I just like the 50% a lot better. And then also what happens, if you notice, let's say you have a little run up like so. You can watch for it to come down to that level, and see what happens. Okay, it's at the 50%. If we were going to take a long trade here, again, back up to the high, give it a 3-to-1. Now let's see what happens. Holding it, holding it, holding it. Getting back above it, stopped out. Stopped out. It's fine, but that's telling you something. That's telling you that it's not holding that level. It's not one to go bullish. Instead, what's it going? It's breaking that 50%. Once again, pulls up, holds it, holds to the top side, maybe even take a short trade off there. And that level becomes the resistance. And so that's why it's not only powerful for catching pullbacks, but once that level is broken, you can have a chance to get your money back, shorting it from that level going down as well. All right. Let's see here. I promised that I would talk about levels. So let's do a quick thing about levels. So in addition to 50%, I look for false breakouts or real breakouts. And very, very simple what I do to look for them. This is a weekly chart of the S&P 500 futures ES. I have a very simple rule when I'm looking at if price is going to hold or break a level. It's very simple. Using the candlestick chart, I'm going to draw a line at the major high or low. And then what I want to see is what price does around that level. To keep me patient, because I'm impatient just like anyone else, I'm going to wait and see if price closes above that level to break it, or if it closes back inside that level to hold it. And so this is around 2020, when in August of 2020, when we had the COVID low, came up, broke the all-time high, and what we had then on a weekly chart is we had the week of August the 24th and the week of August the 31st close above that prior all-time high. That's bullish. We have officially broken the high. You can go long. That's the rule. Now, do not be confused. Do not be confused if price then hangs around, because we have to have a rule. Is it going to give us a perfect trade with no drawdown? No. But we have to have a rule to go on, and it's going to serve us very well into the future. And so even though it danced around a little bit, those two bars closing above it were the sign that that level had broken. Now, if we jump ahead or jump over to, let's jump over to Bitcoin. Bitcoin made an all-time high in April of 2021. And then, of course, we had that summer of 21 where it pulled back to, I wonder what Bitcoin pulled back to. I wonder if it would pull back to a 50% retracement level and hold it. Yes. Did we ever get two bars to close below that level? Hold, 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 hold. One closed below it, but then this one closed back inside of it. This was telling us that it was holding because it would not close below it. And then now, that was when El Salvador went to Bitcoin 2021 summer. How's that working out for El Salvador? How is that working out to encourage some of the world's poorest people to put their money into the most volatile money? I don't know if that's a good thing. Don't ask the Bitcoin maximalists, though. They think it's great. And so as we came back up in October 2021, we had a week that made a new high, but didn't follow through. Close inside it. That's not good. Think about it this way. If Bitcoin was going to go up to 300K, like everyone was saying then, shouldn't more people be buying it? Shouldn't there not be any question that this new high is going to be the new high? You need that momentum. And that's what waiting for a bar to close above or below resistance is going to tell you. There was clearly not enough sellers to push this thing through back in the summer of 21. And so you have a bar close above it, but here we have a new high, a new all-time high. Now, the week of November 8th comes up and still can't get two bars to get above it. That was your sign that it was over. It was. And from there it goes down. Let's see, what did it come down to though? Did it come down to hit this 50% level again? Ooh, yeah, holds it. Look at that. Let's redraw our 50% from the low, the COVID low, to the new all-time high. All right, now let's watch what happens. By the way, these little teal dots that I have are this retracement levels indicator, which, by the way, if you just search for it, retracement levels, it's free on TradingView. I just put it out there for everybody. Nothing fancy about it. It just draws 50% retracement levels. Some people have asked me to pay me for it, which I refuse to give them the code for it. Number one, because it's so damn simple. Number two, I don't believe in selling indicators. Let's see. Let me back that up. Jen might talk me into selling indicators one of these days. All right. Boom. Holds that level again. And remember, this is in the beginning of 2022. You know, there's a lot of people are trying to buy this pullback, thinking that this is the chance, this is the opportunity that they're going to have. But let's watch and see, do we get a week that closes below that support? Rises off of it, hope is kindled, boom. We have a week that closes below that support, and then we have this second week that closes below it as well. At that point, you have 1, 2 bars close below the support. It's over. The bull trend is over. At that point, you have to assume bear. So, to recap, very simple rule. Whenever price comes to a support or resistance level, one bar, you just look for one bar and then a second bar to close, to break the level or close inside, and that's what's going to tell you what price is going to do at that level. And the two main things that I use for everything is looking for 50% retracement levels and major highs and lows. It's very, very simple and very, very effective. Does it work 100% of the time? No, but it works a damn ton. And it keeps you honest. It's going to help you find opportunity at support resistance levels. Turtle traders, basically what you said, a 55-day breakout or 20-day breakouts either way. Yeah, I mean, this is not new. This has been around for decades. You know, a lot of crypto traders have wide followings where they talk about how you got to use new techniques to trade cryptocurrency because it's different, but it's not. It's all the same. It's all the same stuff. It's all human emotion reflected in the price of something. And humans do a lot of the same things. I mean, that's why I kind of put a human face to the top of Bitcoin, where you needed people to keep on buying to push that thing up. But as it turned out, that was right around the time that interest rates were going to start rising. That means that people were not able to finance their Bitcoin purchases nearly as cheaply as they had. And turns out Bitcoin really benefited from a low interest rate environment. And as a final note, as I kind of close, and if you have any more questions, post them in the chat. I think that some people wanted us to look at a few things, but yeah, you know, Elon tweeted somewhere in here. I think Elon tweeted somewhere in here about Tesla buying a lot of Bitcoin, and they got out somewhere around here. they took a little bit of a bath on their Bitcoin. Yeah. Whatever happened to Dogecoin? Yikes. 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 Oh, that's not even the oldest Dogecoin. Hold on. Dogecoin. That's Coinbase. Oh, yeah. There was that Elon Musk about to appear on Saturday Night Live, and everyone said Dogecoin to $1. SMH. All right. Yeah, I mean, everyone was waiting for him to go on SNL. That was peak. Believe it or not, I actually know. I don't know if he is still, but he's a Doge millionaire. His son bought a bunch of Dogecoin back in 2015. And at the high, when it was around 50, 60 cents, he had about $6 million in Doge, but he didn't sell it because his son had actually passed away. And I think he kept it for both sentimental reasons and greed. So he didn't make any money off of it, unfortunately. All right, let's do a quick wrap up. So, trade this week. Amazon. Amazon has done something incredibly interesting. I actually had a post that got picked up by the editors because it's Amazon. But as you guys know, I like my 50% retracement levels. Hold on. I'll start over. And I found it incredibly interesting that from the all-time low to the all-time high, Amazon through this whole 2022 cycle has actually pulled back to that 50% retracement level. Remember the two bars? So bar one holds it. Second bar does close to break it, but this first January monthly bar has come back up to close inside of it. So we're going to reset the count. We need to see what happens with this February month. 2 more days. That's why I was saying earlier that Monday and Tuesday of next week are going to be very important for using monthly bars to analyze, are we holding monthly levels as well as weekly? So watch and see. But Amazon, I don't think is going away. And I think if you can get anything for half off its full-time valuation, that's a pretty good deal. Google is another thing that a lot of people have been trying to purchase on this down move. I actually don't like Google that much because Google pulled back to its 50% retracement from the COVID low to the all-time high in September. Actually, it kind of got close to it in May, but September, you have one bar close below, second bar close below. That is your break. Again, when you see something like this at a major level, just don't worry about what it's going to do in the future. Act accordingly. That is a break of a major level. If we just look at that, if we just focus on 1 and 2, 1, 2, bar, 1 and 2, close below the level. Yes, price can get volatile. Price may even get back above it again. But that level is broken. Notice how it also comes back up and confirms that level once again. Volatility is going to ensue, but as a little hint and trick, this is what lets you kind of day trade around these levels. These levels become very important as day trading levels because while in the longer term, this weekly chart is not holding the level, if you go down here and drill down on a 30-minute chart, maybe you can find a short-term opportunity for some, zero DT option plays off of that level. This is a 30-minute chart. Remember, this is a weekly level. Comes up, tests it, opens with a gap, pulls back up to that level again, buy you a 7-day to expiration call, put. That's how you can use these levels. Very important to use the daily and weekly time frame for these. But back to Google in the broad terms, I don't like buying Google here because it has entered what I call the valley of risk. The valley of risk is basically this area here. this zone between the 50% level and the next low, you don't know when it's going to stop. And then invariably, if people are really heavy on something that's very popular, Tesla is one that comes to mind, which we can talk about that real quick. You know, Tesla was one of these where, again, you have a close above, a close below. First of all, hang on, let's back up. So Tesla was a good example of holding its 50% level back in May of 2022. Ping, ping. See how powerful these 50% levels are? Not 61.8, 50%. I mean, maybe it held it at 61.8, but I don't have time for that. Boom to boom, comes up. Very important levels. This is a weekly chart, mind you. But fails to hold it on the next time it gets down here. And so you have that bar close below it. Boom to boom. All right, there's your 1, 2. That's done. Broken the level. Get out of a long. And then I remember as it came back up, a lot of people would be messaging me and asking me, okay, well, what's going on? Like, when's it going to stop? And I don't know, guys. I don't know when something's going to stop. Once it's broken this 50% level, you're in that valley of risk. It's just a valley that you're descending. You don't know where the bottom is. It just so happens, though, that Tesla did bottom out around 101 and has pulled back. But remember, where are we at now? We pulled back once again to that same level where I took it short 2 weeks ago. And as we go into this weekend, it continues to hold that level. We do not have a close back above that level. Tesla has found a resistance which was past support. And I'm going to throw some shades on my very good friends. Why the hell are you guys buying this? Stop it. You had a good run here. Now, if you can get a 2 bars to close above it again, fine. Buy your Tesla. Do your YOLO calls. Wait until that happens. This is a hold. This is a freaking hold of resistance. You have a buy limit on Tesla at 50? 150 might be pretty cool. I'm looking for this thing to pull back down to 160. That's what I'm looking for. Yeah, stocks go up over the long run, that's for sure. All right, I think someone talked about Procter & Gamble. Sorry, that's a few minutes ago. Procter & Gamble is wonky. I mean, this is a dividend play in a company that's not going to go out of business. I don't think you're going to get much growth from them. I mean, they sell toilet paper. So I'm not sure what amazing advancements there are in toilet paper. But I do own Procter & Gamble, but I don't expect much of it. It's just sort of a nice, solid, hopefully not going to devalue dividend play, basically. They make like a third of the non-grocery. I mean, it's a company that you should have in your portfolio. Consumer staples, if the market starts to go down. I mean, if you think about it, the S&P, the reason you have Procter & Gamble is because in the year of 2022, from the all-time high down to the low, so basically from January 2022 to October of 2022, you lost 27%. Whereas from January to, where's October? Yeah, here. Well, about the same in Procter & Gamble. So no more, no less. But you got some dividends in there. So winning. All right. Let's see what else. I think that's about it. I think that will wrap it up for this week. Thank you. Oh, KR. What's KR doing? So Kroger is coming up on, it is starting to, well, it actually did hit in October 2022, its 50% level here. So be very mindful of the 42 level on Kroger. Be very mindful. But yeah, I'm going to start wrapping up here. It is the weekend. and I'm going to get some dinner. And I encourage you all to have a good weekend, get plenty of sleep. Next week is going to be very important for, like I said, a lot of these monthly levels. It's going to be a short month, but watch on Tuesday for that Case-Shiller number to come out for real estate. Watch these weekly and monthly bars close to see if we're going to maintain this January trend that we had. Stay bullish and trade wisely. CSIQ. All right, if you want to get, you can stop me. CSIQ. Canadian Solar. You'd have to give me a fundamental argument for that. I don't see a trend right here. It had a 50% and it's I don't see any resistances here. I mean, good luck on that. All right. Have a good weekend, everybody. Trade wisely. We'll see you in the next week. Oh, by the way, trading community, Discord plug. Come join. Keep it active. Share ideas. I post my ideas in there. And I do this every Friday at 4 p.m. close. Hope to see you next week. Bye-bye.